First and foremost, this market rally, we know it's late summer, we know volumes are thin, but the bias is obviously to the upside, and it's reacting to good news. How do you think it goes from here? You were talking about something happening in the summertime,
yeah,
or at the end of the summer.
And I'm very excited because the S&P finally made a brand new all-time high. I think it was yesterday. So that's a good sign. And even though we were down a little bit in the pre-market this morning, we held up pretty good. I see us going into a period where we possibly could break out, whether it's the fall of 2018 or early 2019. The market is setting up because we rested for 8 months.
But if we start making new highs, won't there be a sense of urgency for particularly money managers to get involved in this market?
Yeah, that's going to push the market higher. That's exactly the point, because it is institutions that move the market higher. It's big money, hedge funds, banks, institutions. They're in the market now. I can see that they're in, reading the price action. Again, I look at the technicals, and I'm telling you, it's going to come in, it's going to lift us all up.
Well, the fundamentals are phenomenal, particularly for the U.S. consumer. And by the way, folks, after the bell, Williams-Sonoma posted their earnings. Remarkable numbers once again. Their same-store sales are up 4.6%. Their e-commerce business up 54%. Pottery Barn was up 2%. West Elm up almost 10%. Williams-Sonoma, the store itself, up 2%. And Pottery Barn Kids also up almost 6%. Glenn, the American consumer is powering this. There's a new sense, I think, of confidence. And the irony here is that those big wage gains haven't occurred yet.
That's right, but we're starting to see that come into the economy. We've got this unemployment rate that's historically low. I think the consumer has reason to feel confident. The Fed is feeling confident. They think they can raise rates in this moment. So all of that adds up to fundamentals being strong. And if you look at the corporate earnings as well, just the S&P alone, almost all the companies have reported averages about 25% gain in earnings.
The earnings have been so remarkable, David, back-to-back quarters. In the first quarter, in fact, the earnings, we thought they peaked, right? The CFO of Caterpillar talked about a high water mark.
I remember that.
She sent the market reeling, but we've had back-to-back quarters, and now the guessing game on Wall Street is this as good as it gets?
25% year-on-year growth, that's obviously not sustainable, but certainly 10%, we don't like that. But look, we're coming on the heels of a tax cut, and the news is pretty good, and the data really supports a market here. Unfortunately, too many retail investors are going to use today's event as a reason to sell. And, unfortunately, the data doesn't support that. I look around the world, we're the best game in town. If somebody calls you up and says, put money in emerging markets because they're a lot cheaper than the United States, hang up the phone. All right, we have the rule of law in this country. You're not going to wake up in the morning and find, your currency devalued or worse, an industry nationalized.
Paul, I talked about the consumer, and if you look at, for instance, these retail stocks and the ones that hit 52-week highs today, Best Buy, American Eagle, Costco, Dollar General, Five Below, TJ Maxx. That covers every income bracket in America right there. So it's not just one group of Americans. And the reason I bring that up is, this whole political debate on who benefits from lower regulations, who benefits from lower taxes. Those names we just put up suggest that maybe we all do.
Well, I agree with you. And you mentioned about wage gains. But where this money is coming from the consumers is that since March 9th of 2009, the beginning of this bull market, the stock market has created $18 trillion in wealth for the 52% of Americans directly or indirectly who are in the stock market. The S&P is up 323%. You think about that on an annualized basis for less than 10 years, 9 years and something. That's phenomenal. That's where the wealth is coming from. That's where the money is coming from. And it's not just consumers. Corporations are spending, too. I mean, we're at record capital expenditures. And I think it's because of the stock market and because of the tax cuts. That's really been fueling this movement.
And I'm glad you brought up the business spending, because I know ISM, when they did their forecast in December and then they did it again in May, significant jump, 250% jump for manufacturing. Those are long-term investments, so it's not a fly-by-night thing. But, Melissa, Paul also brought up this move, right? Since the March 9th low, 2009, S&P 500 up more than 300%. Since that same period, four-year college tuition in private schools up 20%, public up 24%, a new car costs you 20% more, and the median home price up 47%. 325% covers all of that. right? What will it take to get the average investor to say, this is my road to freedom? This is what's going to allow me to change either the course of my life or perhaps the course of my children's life.
Right. Well, people don't invest money or spend money at these retail places like Pottery Barn and Williams-Sonoma unless they are making more money or feel better about their lives and their future.
But why don't they walk out the store and say, I should be part owner of that thing? Because they just had a $2,000 waffle iron and I bought it.
Right, because people are, in general, and I'm generalizing here, people in general want to take the safe route. So people are adverse to risk, and because of what happened, people are always late to the game. People are late to the party. So I think people are going to get in this market, but it may not be right now. It may not be 2019. It may not be to 2020, and that's why, and just listen here, listen to what I'm saying. This is very important. I think the market continues because you're going to have people get in late. You're going to have the institutions buying in. They're going to push it over the high. They're going to move it up. The S&P is going to go up over 30,000, and then you're going to say, people are going to look around and say,
Dow will go up 30,000 to 30,000?
I'm not saying that. I said the S&P.
Okay.
3,000.
Or 3,000. I'm sorry. Yeah, 3,000. 300 in the SPY. 3,000. I always.
I got you. I got you.
Yeah.
Well, let me bring in David then. And do you agree with that notion that it will take like the sort of tulip mania scenario for the average for people who are not in this market?
I think the fact that a lot of retail investors aren't in the market, that's probably good for us. You know, that's probably good for the market as a whole. And I think it speaks to what's happening. You brought up retail. You know, I wrote down something that the CEO of Target said. He said this is the healthiest environment he's ever seen in his career. And this guy's been in retail.
By the way, I think the retail shopper is even smarter because when you look at Target's numbers, their debit card transactions grow at a faster rate than even credit cards. But Glenn, so we got the consumer 2/3 of the economy. Paul brought up corporations. That sometimes is the difference maker. Do you think that they'll continue because after the close, Nordstrom said, hey, we're going to buy back $1.5 billion worth of our stock. We also want to see them build more stores or build more warehouses and things like that.
There's a lot going on that is inspiring that spending, right? And a part of it's the tax cuts and then that money that was generated. But part of it is also they were holding back for so long that there's an investment that's needed in order to build and boom and take advantage of what's happening.
So some of this was pent up.
And there's also no incentive to hold the money overseas anymore. Now you bring it back here and invest in the economy here. So the people that are going to Target right now, think who goes there. It's not George Clooney. It's not Nancy Pelosi. Yeah. It's really the everyday American who's really benefiting from this.
That's right, because Target, you can't beat it. All right,
and
folks.
Lowe's, too. Lowe's was up today, too, and that's a store that regular people shop at.
I know. Yeah. I know. My wife knows everyone there. All right. Thank you all very much.